So hello everyone, welcome to week 3 and day 1 tutorial about insurance analytics. So you have joined week 3 this morning, right? So yeah, I guess everything is going okay and good. So let's just start. Let me just present my slide and we'll start the session. So this week tutorial or session is about insurance analytics. So it is about finding there is a company, insurance company. So you also on the introduction, the child introduction part, there is an insurance company and you're supposed to make some data analysis and recommend the recommendation or put some labels on the customers of that company, right? So now we will literally see the basic, like what do the concept of insurance analytics, what do we mean by that, what type of analysis do we need to make, and things like that. Okay. So when we say customers, it might be the customer, like the people customer, or the persons that are using the insurance company, or also the insurance company itself. So it might be looking for some customers. So um, what comes to the customer's mind first? So if it is a person or that who is looking for a company, or in this case of for an insurance company to be insured, so what do they think about? The first one is they might see or they might check whether this company is safe or not. They can keep working or doing with that, dealing with that company or not. So the other is, will this company give the best offer or not, depending on what type of offer are the people expecting. And the other is, what is the reputation of the company? So does it have good reputation or negative reputation, so that the people or the clients can decide whether to go on with that company or not, right? So this goes for also for the insurer also. So insurers can also not understand customer behavior, right? So they need to know whether the person or the customer is at risk or have many record of fraud and different character of the customer. So uh, we are going to make this type of analysis, whether they need that customer or not, whether the customer needs that company or not. So especially in this case, from the insurer side, they it is kind of a mandatory role or a mandatory step before giving a policy to someone, or before giving or before accepting someone as their member. Okay. So traditionally, companies are just looking for what happened in the past with descriptive analytics, but now the industry is demanding more, such as what will happen in the future. So, like before that, the core idea, the core idea of how the insurance works, or from the analyst perspective, the first one is risk transfer, right? Individual transfer financial risk to an insurer. And then there's the risk pooling, which is insurers collect the premiums from money to cover the loss of a few, right? So that is what they pay at the end of the day. If there is some damage or loss, then the money they're going to invest or they're going to give for the person is from exactly from the premiums or from the books that they collect from the user or from the customers. So the first one is risk transfer, which is the individual transfer financial risks to an insurer. If there is any risk on this type of uh, like property, if it is, even it's life, right? There is a life insurance. So they're going to transfer the risk. And then the risk pooling, will the insurers collect the premiums from every customer. They're going to use this money or this budget to cover the loss of a few, since not everyone is going to face a damage. And then the data connection will be every premium, every claim, every policy detail generates data. This is our raw material for analysis, which is there's the premium, there's the claim, and we're going to see for the keywords, and every policy detail generates data. But I feel like some of you are already familiar with the keywords. The cycle is the data informs risk assessment. So yeah, based on the data that they have previously and another information, they will assess if there is a risk, and the risk assessment informs pricing. So based on the risks, probably if the people are very risky, uh, or if they're not risky, or if they don't have that negative history, the customers uh, will be comfortable, right? and then the premiums collected from the customers, and then there's the claims paid, and then more data generated. So it starts from the data, using the data and making analysis, and judging the new customer based on the previous data, or based on the previous culture the uh, company was going through. And then based on the premiums collected, there will be the claims paid for few of the people who have faced the damage. And we're going to get more data, and the data will be also assigned for the another assessment. So from the first place, from the beginning, why do we need data analytics in the insurance industry? So analyzing customers can determine which client is trustworthy or may cause great loss. So obviously people, the insurers, the insurance company, they don't want to attract uh, people who have great loss. So it will help them to determine who have a better chance, or who will be a better customer, or who will be a better person to hold on. So analytics create a new capability that empowers insurers to optimize every function in the insurance value chain with the help of data-driven decision making, and it can also detect fraud. So not only the trustworthy fact. I mean, not only the who is more available for damage, or uh, who is not going to face that type of, who have low risk of damage. It can also detect fraud. So some people might just um, create some scenarios to accept money or the investment from the insurance company. So it will also help them to detect fraud. So who is the greatest fraud happen actually? Uh, Next to the, I mean, like, just like there is a fraud in bank, while banks give loans for their customers. So this is also a greatest scenario, or greatest place for frauds to be created or to happen. And the customers can use data analytics to know which insurance company gives a minimum price with suitable offers. So as I have mentioned before, it goes both sides, from the customer side and from the insurer company side. Of course, you're going to focus, since now you're going to work from the side of the insurer, from the insurer company, then from the insurance company, then you know you're going to be focused on that. So there's types of insurance analytics. So we're going to make analysis on a data. So there are different types of data analysis that we've learned before based on the data that we have, right? So uh, for example, we've just made some counts and some graphical representations, univariant graphs and bivariant graphs, if we have just, data to be displayed. And also the other type of analysis that we saw is like if our data is dependent on time, so we will make time series graphs, right? So it is also time series, and it's another form of analysis. So that will help us to predict depending on time. So that is another form of analysis. So if it is in around the insurance analytics, so we're going to make normal analysis that we have used to make. So this will help us, or this will help us to have four type of insights, or we can just have four type of analysis for the insurance company. So what are those types? The first one is the descriptive analysis, which we are actually familiar with. So this will help us to describe the data, or the trend of the data that is already collected. So it will just, by just graphically representing the data that we have, we can just see what happened. So there might be very this type of customers, what type of data that we have. So if we have labeled the customers based on their location, or based on their gender, or based on another factor, it might tell us this geographical location have high risk, or is, might have or might catch a very large amount of risk. And this customers in this type of geographical area will have low risk. So they would, like the insurance company would prefer the people on that specific type of graphical location. And the same goes for gender, and also age, different type of data, or features. So the descriptive analytics will just answer the question, what happened? On this geographical area, this happened. On this age, this happened. On this gender, this happened. So it will just answer what happened on the specific, based on the data that we have. Okay. So this is the commonly used by customers, providing report and analysis centered on past events. It helps companies understand things such as, like, for example, in this project, this will like examine from this project perspective. So it will involve examining historical insurance claim data to understand past trends in claim frequency, claim amount, types of claim, customer demographics, geographical patterns, etc. So, what are the main events that we're trying to track? The first one is the claim frequency, right? So, more claim frequency, it means like more people are trying to, the insurance company is like lending large amount of money frequently. So the claim frequency is, and the claim frequency and the claim amount is one of the most important, also types of claims, as one of the most important features that the insurance company will try to track. The analysis provides a baseline understanding of past performance and helps identify potential areas for improvement in the marketing strategy. So this means that they might not dismiss, some people dismiss like, you're not going to be part of my insurance company, I'm not going to, it might not be that type of measurement that they are going to take, but they might be interested. Okay, there's something on the topic. Uh, is there anything that you guys had mentioned, or was there anyone? Okay, just a quick note, your slide doesn't. Oh, Mawad, thank you for letting me know, but is that the case with everyone? Are you guys not seeing my slide being changed? Because this type of problem had happened before on uh, demonstration, and like no one mentioned it, and I saw it on the video that I was reviewing for another or another tab, there's a VSCO tab. So okay, have time. I can see Mawa'el. Thank you for informing me that maybe it's in your side. The problem is from your side. Could that be the reason? Another comments, like you can just show me thumbs up if my slide is going. Actually, I feel like it's going now. We're on the fifth slide. Slide ነው። Anyone? ከመዋልና ከሀብታሙ ውጪ ብትሰሙኝም በደሴም ከንቶች ያብረማሸት thank you. So I guess I can just go, but I hope like everyone is meet and I'm back. Let's just proceed. So yeah, we were saying about the descriptive analysis, right? Um, So descriptive analysis would involve examining historical insurance claim data to understand past trends in claim frequency, claim amount. So these are the most important aspects or important sites that we need to see, that the insurance company would like to see or would like to track from their claims. So the measurement that they will take might not be dismissing dealers, but they can they might not open their office on that specific geographical area or specifically to the age. They would just make it like saying this type, this age, or people under this age are not welcome to our company, also to our insurance company. So, and also there are different marketing strategy they want to apply, so they might not apply that. So, the point is, the first one is the descriptive analysis. Specifically, it will answer what happened. Okay, this happened here, this happened here, this happened here. So this is the first type of analysis that we make for insurance analytics. The first one is diagnostic. So I feel like I just answered what together what diagnostic and descriptive analysis is, but just like the descriptive analysis, it's used the historical data. So what mean instead of answering the what, we will answer why did it happen. So Is it, you know, what is the scenario? Is it really because the geographical area, or is there something happening on that area that will make the people more accessible for the risk or something? Or is there different type of diagnostics? So the first one is the descriptive analysis will answer the question five. Diagnosis demo, it will answer the question what is the reason behind this analysis. So this could include like maybe it's correlation between factors such as driver demographics, vehicle types, geographical locations, and claim frequencies. Understanding these factors helps in diagnosing the root cause of high or low risk profile among the customers. So related way ደግሞ next to one another apply የሚደረጉ type of analysis ናቸው. So after describing the data or after making the descriptive analysis, we will make the diagnostic analysis. And then the third one is the predictive analysis. So now we have the data, we have described it, we have seen the trend or the how the data is going, and then the next one will be, and also we have said, we have answered why the specific issue had happened on that time. And the other one will be predictions, all right, predictive analysis, which is it's advanced analytics that determine what is likely to happen based on the historical data using machine learning machine learning applications and like maybe time series analysis of tools. So we have identified the problem or we have identified some type of trends, and then like we have seen why those things or why that specific thing is happening, right? So we can say that this specific scenario will lead to this will lead to this result. So if there is a future data that we're going to accept or a future new customer that is going to enter to our insurance company, then we have a reason to see, oh, this person is more likely a fraud, or this person will be just, is not going to be a good input to our company. So at the outset of any predictive analytics build, so there are three core elements need to be established. The first one is identifying the problem to solve, and then define what do you specifically want to predict, and then state what you will achieve by doing so. Because at the end of the day, you're going to recommend or you're going to tell the company like the state, right? So by doing this, I have brought this type of insight. So this is the insight that I wanted to present for the clients. So it would use to develop models that predict likelihood of future insurance claims based on historical patterns. So machine learning algorithms such as regression models, random decision tree, they could be applied to predict which customers are likely to be low risk and which are high risk. So based on some measurements that we've collected from the previous analysis, we will make the predictive analysis. So this predictions informs the optimization of marketing strategies, premium adjustments for low risk targets. So we might, put different type of premiums for low and high risks uh, of people. Prescriptive analysis is like the final pillar, which is pertains to true guided analytics, where your analysis is prescribing or guiding you towards a specific action to take. So it is effectively the merging of all the three predictive analysis. Or on the previous slide, like maybe the marketing strategies, changing of marketing strategies, and or like adjusting the premium adjustment for low risk targets are the measurement that you are recommending for the clients or for the people that you are working for or for the insurance company owners. So that is what do you prescribe? Like what are you recommending specifically? So it is the collaboration recommendation of you, who made the data analysis and who have seen all of the uh, risks and good sides, and then the owners who are like who are the decision making board. So it will the aim is to take the educated guess or assessment out of data analytics and streamline the decision making process. So like for this specific insurance solution, it would involve recommending actionable insights based on the predictive models. So for example, the analysis may recommend specific marketing campaign or pricing strategies tailored to low risk target segments, which were mentioned before. So this type of decision would be made by the other people, but you are just going to recommend those decisions. So like there are many keywords that you need to know and use on insurance companies, but like the main keywords are, the first one is premiums. Probably most of you are familiar by now, but if you are not, I was mentioning it like many times, but when you purchase an insurance policy, you'll be required to make regular payment. That is the premium. So As we have mentioned, the first step is the insurance company will collect the money, and like it will the money from from all, which is the premiums. They will collect the premiums from all, and they will just give it for one of the and give it for the few who are faced with some damage. And the total claim is a claim for my request to your insurance company for coverage or reimbursement for a loss or damage. So that is the goal of insurance, or what this is the purpose of someone being insured, right? They will get total claim for any type of damage they're going to face. Any essence, yeah, for the specific thing that they are insured for. And no claim discount is many insurance companies offer a no claim discount to policyholders who haven't paid any claims within a specified period. So this can lead to lower premium over time. So yeah, no claim discount mean like as mentioned here, if you have not filed any claims or if you have not uh, had never been faced to any type of challenge, so you're just putting some input for a large amount of years where the company is just giving some input. So you might this might lead to lower premiums over time. Uh, and another benefits for the customer. The other one is a deductible or excess, which is there is the amount of money that the customer is responsible to pay out of their pocket. Okay, for example, if they have some car accident or something, if they have a deductible of 500 birr or USD or whatever it is, your car sustain, and if the damage is going to make you pay for around 2000 birr, and then you need to cover the 500 because that is what you have agreed with the company as a deductible or excess. Okay, so you will pay the first 500 and your insurer would cover the rest 1500 birr. So like maybe if the cases like if you have some accident, I don't know, or something like, and it costs you around 700 birr, or so if your deductible from the beginning is like 5,000, and if you face some problem and it will cost you the same 5,000 or 4,000 birr, then this means that you don't have any reason that will get you in contact with the insurance company. So you need to cover all of the birr, okay? Since the birr is under your deductible or your excess number. So you need to cover all of it. So that is what deductible is. And the other one is underwriting, which is the process insurance companies use to assess the risk of insuring you or your property. So it ensures evaluating factors like your driving history, if you're trying to make if you're trying to insure your car or in the name of your car. So they will just look for your driving history, location, type of car you own, to determine if the company will offer you coverage and at what premium. Okay, so this is clearly or shortly what you guys are going to do, which is the underwriting, right? Assessing people if they deserve uh, the not the claims actually, if they deserve to be part of the company, or in what amount or in what premiums do they need to be part of your insurance, part of the insured people by your company. So in our case, it will depend on the previous history or in the previous data that we have. So that is what we put underwriting. So these are the main keywords. This is the main concepts of insurance analysis, and why do we need to make it, and what type of analysis are we expected to do. So yeah, just go through them, read them, and uh, have the basic and also the detailed form of the insurance analysis, uh, and then include it on your report and use it for as an insight for your analysis that you're going to make. Okay, so let's see if anyone, like, if you have any question. Also, if it is clear, you can just show me your thumbs up. Thank you, Mawar. Thank you, Mawar, 5 times or 6 times. So I will consider that it is clear. If you have any question, you'll reach out as usual. Thank you, everyone. Good luck. Good luck with that with your other works. I will share the PPT on the Google Drive.